Good evening, everyone. A very warm welcome to the webinar tonight. I trust that you had your dinner already, and thanks so much for joining us this evening. I'm sure it'll be worth your time. Okay, so before we begin, please allow me to introduce myself. My name is Richard. I'm the organizer for tonight's webinar from Wealth and Joy, and I'm also your host for tonight. Now, if you're here for the very first time, please do join our Telegram channel at Wealth and Joy. So just go to Telegram app and search for Wealth and Joy and join the channel so that you can be kept posted of upcoming webinars as well as updates. All right, so moving along. Now, please allow me to share with you an inspiring quote that have kind of like give me a wake-up call to make me think about what I'm doing with my time and also my money. So this quote came from none other than this gentleman called Warren Buffett. We all know him, right? So this quote, he once said that if you don't find a way to make money while you sleep, you will work until you die. So when I first saw this quote, wow, it's really inspiring. So do I have, or do you have something that is making you money while you sleep? Otherwise, if not, then we will have to work until we die, and I don't think any one of us want that. Correct? So tonight, I believe that what we will share with you can help you make money while you sleep. Okay? So yeah, and in the pursuit of wealth, I believe that there are two paths that we can take, and they are either the driver's path or the passenger's path. So what do I mean by that? So the driver's path is also what I call the DIY path, where you do it yourself. So examples of this would be you take a course, you watch YouTube, or you go and find a mentor that teach you how to invest or how to trade, and then from there you will need to go and trade and invest yourself lah. So that's how you DIY, much like behind the wheel and to drive to get you from your point A to point B, your financial goals, your financial destination. So the other path, which is the passenger's path, which is what I like to call the DFY way to wealth, is where you just sit back, relax, like in your first class seat in your plane, and then there'll be a pilot, and then there'll be the SIA girls that will serve you wine and food and then you just relax, and then eventually you just wake up to your destination. All right, hopefully, right? Yeah. So DFY stands for done for you. And of course, the pilot and the SIA girls will need to be paid, right? So, of course, therefore, there's certain fees that we need to pay to them. So these are essentially what I feel as two paths that can lead us to wealth. Now, which is a better way? Is it the DIY way or the DFY way? Do you prefer to be the driver or do you prefer to be the passenger? Right? So there's no right or wrong answer. It's a very personal choice. For me, I believe both are doable. So if you look at your finances and you have a lot of DIY, then perhaps you want to diversify a little bit to some DFY. And if you have a lot of DFY, then you may want to consider doing some DIY. But if you DIY and you cannot get the kind of results you want, then I think DFY would be the way to go, correct? So for tonight, then the next question would be, where can we find service providers and opportunities for DIY or DFY? So that is what inspired my friend and I to co-found the website and community called Wealth and Joy, where we put wealth building, education, and opportunities under one roof. So if you logged in as a member, you're going to see this same quote that inspired us to co-found this community. And then you will find the different service providers that can help us to DIY or DFY. I won't take up too much time here. You can log in and take a look at it yourself. And the question then is, how much is the membership to be part of Wealth and Joy? And the good news is, it's absolutely free. So just go to my.wealthandjoy.com and you can create an account and take a look at the curated list of service providers there that you can choose from. All right. So if you have just joined us today, then please remember to join our Telegram channel, Wealth and Joy, so that you can be kept posted of more wealth building, education, and opportunities. All right. So without further ado, let me now cover this very important slide, which is the disclaimer. Now, you are responsible for your own profit and losses. The speaker's opinion are their own and does not represent Wealth and Joy's opinions. Wealth and Joy, its owners, partners, and sponsors are not responsible nor liable for your losses. Wealth and Joy events are for educational purposes and should not be construed as advice. And when you're in doubt, please seek professional help. Okay, with this very long slide out of the way, now tonight we are going to be sharing with you between these two paths to wealth, the DFY way, right? So it will be just sit back, relax, and our pilot will and his service crew will bring us to our financial goals. Okay, so I'm sure that you will have questions as the speaker tonight will be sharing, and you have questions along the way. Now, please look for the chat box that is on your screen. If you are watching this on the desktop computer, then the chat box will be on the bottom right. You can type in the questions you want anytime during the sharing, and our speaker for tonight will answer them at the end of his sharing. If you are watching this on a mobile device, then you will need to scroll up or down and look for a chat box where you can type in your questions anytime. So please feel free to type in your questions anytime, okay? And as promised, you will find out how you can qualify for a free Fitbit Charge fitness tracker worth 268 Sing dollars at the end of the webinar. And so stay tuned to the end, all right? So with that, I'd like to share with you tonight's topic, and that is, how can we leverage on artificial intelligence to grow your wealth with SquirrelSave? Okay, so it is my privilege and honor to invite Mr. Victor Lai, who is the founder and CEO of the company called SquirrelSave, who is a MAS regulated fintech company based in Singapore, to share more with us how his company can use AI and machine learning to help us make money. Okay, so without further ado, may I hand over the stage to Victor, please? Victor, would you like to turn on your camera and your mic, please? And you can also take over the screen.
Okay, I will stop share. Okay, can you see my slide?
Okay, still loading. Yes, your slide is out.
Okay, good. Thank you. Thank you, Richard, for this opportunity to share SquirrelSave with your members. And good evening to everyone. My name is Victor. I'm just going to run through the slides and I welcome questions at the end. So first of all, SquirrelSave is MAS regulated. We are based in Singapore, but in founding this company, I believed that we should bring technology to benefit people all over the world, especially in this Asian region. So that's the reason why I'm starting SquirrelSave, but I'll leave that for another day. So let me carry on to the important thing. As Richard shared, we are in the financial markets and we're very particular about making sure that people do not misunderstand and that we do not misrepresent ourselves. So this is a disclaimer, all right? We are on the Apple App Store as well as Google Play, and those are our URLs that you can see. And we have won several awards the latest being the Singapore Business Review during COVID of all times for our innovative gamified risk profiler. Now, this is just a bit of my background. In short, I have basically almost 30 years now in three very different industries: investments, insurance, and healthcare. And this is very important for me to share with you because it is through these separate industries that I discovered the importance of data and how today these industries are siloed and do not converge. So SquirrelSave is part of that journey. Why? I want to bring data and artificial intelligence, starting with investments. So that's basically my experience in investments, insurance, and healthcare. So what do we do at SquirrelSave? We basically just make investing easy. In this case, the first product we launch is a global portfolio. So we make global investing easy. How? Well, to keep it simple, we use AI. So if you have any interest, then I can share a little bit more, but that's another big topic as well. Our objective is not to chase returns. The reason is I have very strong views about what is investing and what is trading. Just as some people now have this debate between active and passive. But to be clear, we are not trading, we are investing. And I'm using AI to do it properly, which until around 2015, I would say it was not possible. So this is still very new. The other thing is that, are we active or passive? Well, neither. We are actually smart active or smart passive, but in between, we're using AI, so we're smart. So basically, for you and for many people in the region who have not yet even had the joy or the opportunity to capture investment returns, because many legacy companies are only interested in the big stuff, and that cost base hasn't allowed them to go to the man in the, not even in the street, the man in the village and the lady in the village and the children in the village. So this, I feel very strongly, and that's why I'm doing this. So therefore, on the bottom right-hand corner of this slide, we basically say you don't need any investment knowledge to invest globally. Now with AI, you don't have to make buy or sell decisions. And you can start with any amount. Yes, indeed. And later I'll show you how we can even give you a global portfolio for just $1 Singapore. The most important thing we always say is, please know yourself. And I'll explain why when we talk about risk profiling. So here's a video.
Investing is never simple. So much information, too many products. How do you protect your assets? SquirrelSave solves these problems for you. Tailored to your age, assets, and investment objectives.
Victor, I think the video is not shared on the screen. May I trouble you to share it again, Victor?
Hello, it's not sharing on the screen?
Yeah, so maybe you try to share again, please. Sorry.
Oh, that's interesting. Okay, let's try again. Is it sharing?
No, I think you got to click the share the plus sign again to share the screen.
Okay. Maybe we'll skip the video.
Okay, but the slide also have gone off the screen, so I think just have to share the screen again. Yeah.
Okay, let's see. Oh, it's gone off. Interesting.
Okay, I think it's loading. Give it a few seconds.
Can you see it? Let me know when you can see it.
Okay, it's still loading. It still says loading. Yes, okay. Slide is on.
Which slide do you see?
Managing investment risk 24/7.
Okay, I'm going to skip the video.
Okay.
Technical problem.
No problem.
But the video would have just basically showed you some aspects about AI and how we use data to cover the whole world. And it has a lot to do with mathematics because the permutations and combinations is just beyond human capability. And that's why it's called AI. So let's move on to this slide. Basically, the conclusion, therefore, is to manage risk, you need to track data all possible data. And if you are statistics trained, I'm not sure how many of you are, then you can understand when we talk about normal distributions skewed, you need to take all data, but it's not possible. So managing investment risk, not just impossible, but running it 24 times 7 is definitely not possible, because today, thanks to the internet and low-cost communications, our global investment markets are revolving as the earth turns. So tonight, you can even look at the US markets, and next morning, Japan, and so on. So investments require risk management, and risk management is not humanly possible. So we use AI to compensate for this. So what you see on the screen are just samples of different mathematical models. Don't worry, it looks complicated, but essentially what you need to know is that all the dots on the right-hand side, they're all the same dots, but we use different mathematical models to look at patterns. And not just patterns, these algorithms can do ranking, they can do classification, they can do separation, and they can do prediction, right? So these are all what we call machine learning models on the right-hand side. On the left-hand side, we will look at that data and we'll probably just draw a line. That's the best we can do. But let me explain to you that even showing this on the slide, I'm simplifying and oversimplifying. The reason is this is all 2-dimension, but this data may be sitting in 3 dimensions. And what if I tell you 4 dimensions, 5 dimensions, n dimensions? So the human brain can't process, but mathematics and the computing power can do this and make sense of it. So that is my simple way of trying to tell you AI is actually a set of mathematics, but computers can do it faster and better than humans. That's why it's called artificial. How do we then translate all this into investments? So we have what we call the factor analytics machine learning engine that we created. And what we do, without going through the details, you can read my white paper on my blog, on my website. We basically use the data and we get the machine to predict when is it a bull, when is it a bear. But it's not that simple. There may be 10 degrees of bull and 10 degrees of bear. So the machine is able to even look in between the integers, 1, 2, 3, 4, 5. We can look at fractions to the 200 decimal points. And that's how detailed machines can be. Now, that's the first thing. So they also look, if they say it is, say, bull 1 to 5 or bear 1 to -5, they will then be able to also look across all the factors. So the common factors that we in investments would talk about are price earnings ratios, book value, dividend yield, earnings growth, market cap, and so on. But hey, there are hundreds and hundreds of thousands, all right, of factors, ratios, which the machine can look at, which even just to describe it, it's impossible for a human to do so. So we use the bull and bear predictions to then look at the behavior of all possible factors under these different bull and bear conditions. And then we apply it to the returns, all right, and the risks. So returns are just simply point A to point B, what's the difference over time? And the risk is how it moved from A to B. What was the pattern? So this is beyond human, and we use artificial intelligence to do all these predictions to come up with an optimal combination that will give us our targeted return and targeted risk. So that's our factor analytics machine learning engine. So that's another 10, 12 lectures. But let's go to the product itself. We also apply AI to help people find it simple to define their own risk. But many psychologists and even I as an investment professional know that even my own risk profile changes with time, changes with age, but more importantly, it changes with market conditions. A conservative person in a normal time can take a lot of risk during very bull markets, but suddenly turn very conservative when the market drops just a little bit. And likewise, a very risk-preferous kind of person may be very extremely risk-taking during a simple bull and still take a lot of risk when markets are down. So behavior is not constant. That's the point. So how do we then today, and I run a bank, investment bank, I've run a private bank, how do we justify giving you 16 pages, 12 pages, 3 pages, 20 questions, asking you very detailed points about technical points, variability of returns, volatility, market conditions. I think many people don't even understand these terms, yet they have to fill it out and then they got a risk profile. So these are the inner secrets I know, which is not right. It's not the best. So here on the screen is my simplest representation of what I've worked on. I've worked on very complex game theory to analyze your risk reward behavior. What you see on the screen is the simplest game that I have delivered for execution commercially. It's a simple guess which cup contains the ball. There are penalties. If you go to my SquirrelSave website or you download my app, you can play. Basically, there are mathematics behind, number one, but importantly, there's AI that assesses your decisions under different conditions, which means that anyone, even if you can't read a whole book, but you can understand some basic words, and many financially illiterate or even illiterate people play mobile games. So by playing a game, my game using AI is analyzing your risk reward behavior and then correlating it to an investment portfolio generated for you in real time. And that is the beauty of our AI. So please experience it because I can only show you here on a static screen. Now, the interface, basically, the steps are choose your investment risk. That's basic, but you can play the game. Or you can set up, and then after that, you set up your investment goal. How much you want to invest and so on. And third, transfer money. And our machine does the rest. It's that simple. And what's very important to differentiate is that we are giving each person a personalized portfolio. Yes, a personalized portfolio, whereas other people will give you a model portfolio and everybody who falls into the same risk label will be given the same portfolio. But ours is not necessarily the case because even if you say all three of you are aggressive, you may not get the same portfolio. Why? You're of a different age, you have a different time horizon, and so on. So we can use AI to make it a little bit more customized. The second thing is that there is no decision or knowledge you need. Just decide your risk, know yourself, park your money there, and let our AI do the work. And it does it, as Richard says, while you sleep. Lastly, what's the minimum amount? There is no minimum amount, but you start with $1, and $1 gives you a global portfolio. But don't keep $1 because one of my clients made about 17%, and he put in $1, it's only up 17 cents. But if he had put in 100,000, that would be 17,000. Now, what would you get in a bank? So these are things that you have to decide, but our engine makes it very easy and friendly for you to try us out. And you can withdraw and you can top up anytime. So there's no lockup. So these are the features. The important thing is that the money is safe because the monies are not kept with us. The money is kept by our custodian. Under the MAS, we do not use your money. It's invested. So it's safe. And anything happens to Squirrel, someone asked me before in my webinars, your money is still there and you can decide what you want to do with it, actually. Here you see a screenshot of the risk profiler. So if you log into our website, you'll see this. If you go to our mobile app, you see a slightly different representation. But here you can either play the game and let our AI assess you, or you can just decide. So either way, it's very easy. You decide. Here is a screenshot of what you do once you have your account approved and you go through our KYC. Then we'll tell you with an auto email that your account is ready and you can log in. And then the first thing you do is come to this page and set up your first goal. So right at the very top of the page, you just simply say, I want to invest whatever you want. You want to choose whatever risk profile, you decide. Or if you want to do financial planning for your retirement, for your education, or for parents in this webinar, if you want to save for your child, there is the KidSave on the extreme right, where you can actually park money for your children and name it in their name. And not only that, if you create a KidSave account, you can click a link to our Squirrel Treehouse that has got currently 3 videos to teach your children about how to count money, what is a need, what is a want, and lastly, what is the difference between spending, sharing, and saving to teach them some values. So these are things that are available on our current application. And we are going to be launching a new feature very shortly. So look out for our announcement in the media. The important thing is that for SquirrelSave, I've built it in such a way that one customer opens an account and you can have as many portfolios as you want. You can have, in fact, I've got currently about 67 portfolios because I have to demo to people and so on. But most of our clients have 2, maybe 3 portfolios. Each goal is a portfolio. So one account, you can set up as many portfolios or goals for various reasons. All right. I also want to remind people that this is a fact. In Singapore, unit trusts are the traditional investment products sold by banks and so on. Singapore, unfortunately, we have one of the highest expense ratios in the world. And yet there's over 100 billion of our retail customers' money sitting in unit trusts. I used to be a fund manager, so we know the kind of fees we're charging. And so we have launched SquirrelSave because we think that our SquirrelSave portfolio is an example of something that's better than the unit trust structures, which are not real time. You do not know the real value. It's 1 or 2 days late in valuation. But with SquirrelSave, what you see is your real value because it's live. All right. It is actually traded on an exchange. So this is something which, particularly for Singapore, it's a pity because many people should be holding the SquirrelSave type of portfolios rather than unit trusts. Now let's talk about performance. Singaporeans, when I tell them you got to manage risk, then go for returns. But we are all programmed to go for returns. But hey, what kind of risk are you going to take? So some customers tell me, oh, so I understand higher risk, higher returns, right? I say, well, that's only half the story. Higher risk, higher returns, yes. But the other half of the story is bigger losses. But nobody talks about that. So that's why I started SquirrelSave, because with data, we will be looking at the downside as well. So here, we had this big crash because of COVID. I didn't expect it when I launched SquirrelSave in 2019 in the second half. I didn't expect that in about 3 to 4 months from the date I launched, I would meet a huge, huge crash. My last crash that I remember is 2008. In between, there were crashes, but smaller. And here, COVID was a huge one. So let me now show you how we behave, how our AI behave. Because some people tell me, oh, machines, how are they going to react? Well, I tell you, machines, now we use real data, don't talk. They have no emotions. So the COVID crash happened in February 14, 15. And on the 19th was the peak in the S&P 500. The S&P 500 on the 19th of Feb fell from its peak to down by 34%, all right, about a month later. So I started a portfolio because I'm the guinea pig. I started as the first customer. And so it started on the 1st of June, 2019. So by the time the crash came, my portfolio was already 7 months old. So it's good to see how my AI with machine learning cope with a sudden crash. My portfolio, as you can see, did quite well versus the market, which fell 34%. My portfolio dropped only 10% from 19 February to 23rd March. This is a $15,000 portfolio. If you can look at the chart on the right-hand side, I remember January, I was looking at it happily. It's about 16,100. My capital was 15,000. So I had very good returns. And who knows, the market started crashing, but it fell only 10%. So this is very important for you to understand that our machine looks at the downside as well. Now, what happened was, luckily, there was a recovery. So on the 18th of May, 3 months after the drop, I looked at the S&P 500. Remember, it fell 34%, but on the 18th of May, it was still 14% below the peak. But look at my portfolio. My portfolio recovered even more, and it was only 1% from the peak, but it was still above my initial investment of $15,000. As you can see on the screen, it's 15,887. So now we know that our machine can behave and manage money even through a crash. So this is very important. I didn't expect to have a live test. Now we are crash tested. I want to show you that our portfolio, all right, at the end of 31st of December, all right, this is the same portfolio. It's up 15% per annum in a year where there was a big crash. All right, and I had to stomach that, but it still delivered 15%. All right, and this portfolio has been in existence for 19 months. It was up 23%. But look on the right-hand side of the chart, and you can see how our machine, not me, I don't even have to decide. The machine does it for me, and it spreads my investment across fixed income, 5 types of fixed income. This is not possible because you can't even buy one bond. Yet, using our technique of buying exchange-traded funds, we are able to give you 5 bonds, or the machine is able to do so, 3 alternatives, including gold, developed equities, emerging equity, all decided by machine. I don't make the decisions. The machine does it. Now, with the machine and AI, I can now bring value to the world. Do you know how many people in Asia have no bank account? 1 billion. Do you know that we in Singapore are sitting next to the 4th most populated country in the world, Indonesia? And many of them are just earning money in cash and can't even put it in a bank to earn some small interest rate. They can't even invest and get some decent returns of 5 to 6% to beat inflation. They don't. We are lucky in Singapore. But here, SquirrelSave is able to help anyone, including our Indonesian friends, our Vietnamese friends, anyone around the world, Africa, wherever, for $1. Now, let me show it to you. This is a conservative $1 portfolio, and I'm showing you as of 31st of December 2020. As you can see on the left-hand side of the screen, the total deposit is the amount of money that was invested is $1. And on the top right-hand corner of the mobile screen, it's $1.06. In other words, $1.06 versus your investment of $1, it's a 6% return. All right, 6% return. It was started on the 18th of May. 7 months, it delivered 6%. And on the right-hand side, for $1, and this shocks many of my friends and colleagues still in traditional asset management, they know, and I know because I used to be a fund manager, what I'm showing you on the right-hand side is not possible for a human fund manager to do for $1. And here we have 22 asset classes for your $1. And you can see everything that's been invested for you by our machine. Let me show you the aggressive portfolio. So on the screen on the left, you can see the total deposit is $1. All right. But look at the asset value for the very aggressive portfolio. It's $1.12, which means this portfolio has jumped 12%. It started also in May and said for 7 months, 12%. For the whole year, annualized is 19%. On the right-hand side, it has 21 diversified asset classes, all decided by machine. Now, let me show you what it is as of yesterday. All right. And of yesterday, you can see in the middle of the screen, it's $1.17. So between the end of December 2020 and 31st and yesterday, all right, so it's already more than 3 months, it's gone up from $1.12 to $1.17. That's another 5% in about 3 months and 2 weeks, 3 months and 1 week. So that is what our machine is doing. All right. I want to show you the latest performance of our various risk portfolios. Now, bear in mind, I do not run a fund. I run a separate managed account for each individual, even for $1. You get your own. So we have taken some reference portfolios that we started, conservative, balanced growth, aggressive, very aggressive. And you can see in January, all right, the returns, February, March, and of course, year to date, 6th of April, that's the kind of returns we have generated. And that's only about 3 months and 1 week. For the very aggressive, it's up 7%. So this is our latest performance. So with that, I want to thank you for listening to me. I welcome questions. We are not well known because we do not really advertise, but I'm doing what I can. And in appreciation of your attendance, together with Wealth and Joy, we're offering you this interesting smartwatch from Fitbit for the first 3 investors who deposit at least $20,000 by 30th of April 2021. and you have to put in the promo code wealth enjoy to claim for it. All right. So with that, I hand over to Richard, and happy to answer questions that you may have. Thank you very much.
Thank you, Victor. Okay, that was a very comprehensive and concise sharing. Yeah, and the portfolio did very well this year.
Yes, we're pretty happy about it. Yes.
Yes, I noticed that there are, so for everyone who is attending right now, if you have questions and you're watching us on YouTube Live, please come inside the webinar room so that you can type in your questions in the chat box on the screen. And if you're watching us on the desktop computer, please go ahead to type in your questions in the chat box, and I'll relate your question to Victor. So let me share my screen since let me see. Share screen. Okay, and like Victor has already said, if you are the first three to invest about 20,000 to 20,000 by the 30th of April this year, then you can qualify to receive this Fitbit fitness tracker worth $268 for the first three persons to do that by this month. Okay, so might as well, if you are already planning to outsource some of your your investment or trading to, in this case, artificial intelligence and machine learning model that Victor and his team has built, right? So I can see that some of you are typing in the question, so please go ahead and type it in. Now, my question was going to ask Victor was about the 5 different risk levels. Now, it ranged from very conservative to very aggressive. Is that correct?
Yes, you can say that. Yes.
Okay, so there are 5 risk levels. So how is that risk level differentiated from each other?
Okay. In human terms and marketing purposes, so we cannot confuse the customer. So for labeling, it's conservative all the way to aggressive, and we say it's 5. But actually, because we are using AI, we have a lot more portfolios, right? And it's not actually 5. So I explained earlier that if you are conservative, and 3 of you call yourself conservative, but when you invest, you may not get the same portfolio. All right, you may not. The reason is you may not be of the same age. You may have decided to take a 1-year horizon, other people 3 years, and other people more than 5 years. So our AI does the calculations based on these personal parameters you choose. And the simple theory of investing is this: if you are older and you invest for 1 year, well, technically my AI will tell itself that it cannot do a lot of adjustments for you because within a year you're going to want to see your goal achieved. So the AI will pick things that are not too volatile. So your portfolio, although you say you're very aggressive, you're older, and you pick one year, your portfolio may not be the most aggressive in our algorithm, all right? Versus someone who, let's say, is the same age, also old, but he says more than 5 years. But his portfolio will have more spice in it because he's got 5 years to give us to rebalance the portfolio, right? So these are all mathematics. So the answer is yes. For marketing, we say that's 5, but the AI is bespoke to the individual, and therefore we have more than 5 portfolios. That's the answer. The secret is if you invest below a certain amount, you're likely to get the same portfolio. But you invest above a certain amount, you will get your own algorithm. And the answer is very simple because in the real world, I cannot control intermediaries who charge minimum fees, right? So if you have $10 to invest, you're going to hit a minimum fee, right? Whereas you got $1,000, right, or 15,000 better, you won't hit the minimum fees. So my machine will give you more stuff, more mathematical degrees of freedom to perform. But if you have a smaller portfolio, you can still perform, but we would group more people together so to avoid the minimum. So that's what our AI does at the back.
Right. Thanks for the comprehensive answer. Wow. So it sounds like every portfolio for each individual is tailor-made.
Yes, that's what we say.
Fantastic, fantastic. So we can't really compare lah between two friends who put in the same amount at the same time. Even though they choose the same parameters, the portfolio construction could be different.
Unless you invest very small amounts, then you will need to be the same because we have
And
to pull all of you together to avoid the minimums.
yes, understand that. Okay, cool, cool. Now, then the next question I have for myself, I asked first
Yeah.
while we are waiting for the more questions to come in from the attendees,
Okay.
is that for the machine learning and AI, there's always this concern of curve fitting, right? So, and then also, what is your opinion about that?
We have no curves. Like I explained, we are not a 2D 2D Excel spreadsheet where you can have a curve. We are to the n dimension. So we are m times n matrices. So if you understand, those of you who are mathematicians or computer coders or doing machine learning, you'll understand. There is no curve to fit. It's three-dimensional, but it's to the n dimension, and it's all factors. So it's not curve fitting. I think maybe perhaps your phrasing is it's based on historical data, maybe that's what you mean. So is it relevant for the future, right?
Yep.
So my answer is yes, that question is a fair question, but we are using machine learning. Machine learning employs so many different types of algorithms. And so I give you one, linear regression. Linear regression will use historical data and predict, right? And it will try to fit a curve, inverted commas. But that's not the algorithm we use. We have Bayesian, random forest, right? Support vector machines, and so many derivatives of these algorithms, which the machine decides to use. So think of all the algorithms as analysts, right? If you understand traditional investing like I do, I used to be an analyst, I used to run a research team, sales team, and so on. So we have analysts who give their opinions, right? But the opinions of humans are subjective. But here, our algorithm gives opinions based on mathematics, and there is a master judge, if you like, who will look at each algorithm's track record, right, in statistical terms, and will pick a combination, not one, combination of algorithms and do another testing. All this in real time. That's why I say this AI is only possible for us consumers around 2015 onwards. Prior to that, it's available, but it's too costly. And the main reason why it's available, honestly, is that your mobile phone, the chip, is so powerful, it can send more than 120 million Apollo missions to the moon at the same time. That's why the computing power now, even on your mobile and on our laptops and in our AI, is able to do these things for the man, not just in the street, but in the village. So why are people not using it? It's silly, right?
You are ahead of your times. But
No,
now with
it's
this
ahead of the
webinar,
times. I have people say, I invest too. Then I say, how do you invest? Oh, I buy stocks. I say, stocks. Oh, no bonds, no stocks. How many stocks? Oh, depends. When this thing I think is going to go up, I buy this one. I have about 4 or 5 stocks. And then I said, you call that investing? So people have different understanding of investing, and the word is very loosely used. That's not investing. So I said, I might as well go to the horse races and pick a couple of horses. Because that's what you're doing, right? So why aren't you using data to manage the risk? Because volatility can be measured, but we can't as humans. So I believe people should be using it, but if you're earning fat fees doing old products, why rock the boat, right? That's why fintechs exist.
yes, I really love the solution you're providing, you know. So one of the questions that attendees are asking
Yeah.
earlier on is how are the fees like from SquirrelSave?
Yes, important. So the fees we charge flat. Flat, so we don't go, if you invest 25K, it's 0.8, we want to keep things simple. It's 0.5% flat. I've studied the others. So 0.5% flat. But what I believe in is really performance, because I do hear my customers, I've had so many clients, high net worth and so on. Like it or not, the high net worth can afford to gamble. So they like returns. But for my fellow who's putting their precious 20 bucks or 100 or $300, I need to look at risk management. So I believe that while managing risk, I can still deliver returns. So apart from the 0.5% flat, we have a performance fee of 10%. So in a way, we are delivering quantitative hedge fund kind of strategies that only high net worth can enjoy to not just the man in the street, but the man in the village. And in today's terms, also the women in the village. So performance fee of 10% is what we have.
Right. For the performance fee, is it deducted annually or monthly, or how does it charge? And also for the 0.5%, is it deducted annually or monthly?
Okay. So the management fee is calculated on a daily basis and deducted monthly. The performance fee is calculated only at the end of the calendar year or when you withdraw.
Mark to market when I withdraw.
Yes.
Okay, so I hope this answers the question. Some of the attendees are asking, like Ella, let me see, Kokpo also asked this question, and also, okay, Peng Hong is asking, does the numbers you show, are they already have excluded the fees or before fees?
All fees are deducted because we are AI, the fees are coded into our algorithms. So it's after management fees, but before performance fees.
Okay, and the performance fee, is it on a high watermark basis or?
Yes, it's a high watermark feature to ensure we don't double charge performance fees.
Right, and then the high watermark is, of course, also based on calendar year lah.
Yes, it's at calendar year end. So the figures that I showed you for January, February, March, the performance fee has not been deducted because it's a running portfolio, but it was deducted at the 31st of December, but that's already taken out and still it's gone up 7%. Yeah.
Okay, understand. Okay, I think that covers the fee aspect. I have grouped together the questions to ask you. So I think that's a very reasonable fee. I think on the fund management side, the traditional hedge funds are usually 220, although some have charged lower, and of course some charge higher. So 0.5 and 10, I think, is very competitive.
I think what's very important to share is that if we don't perform, we don't earn the performance fee. And if we do perform, it's taken out of your profit, money that you didn't have in the first place. So I prefer to do that because we are aligned with the customer.
Yes, I think that is a fantastic approach. I hope that answers the questions of Alva as well on the fee. And let me see, what is the next question? Ella is also asking, which markets and industry or segments does your platform invest in?
Okay, we use machine learning. So we don't prejudge which sectors or markets. It's based on quantitative analytics using machine learning. So earlier on, you saw, for example, the $1 portfolio has 22 asset classes. Even I am mind-boggled because the machine is learning and getting, inverted commas, smarter. So it is got like 5 bonds. And those bonds, if you look at it carefully, they are bonds exposed to treasuries, corporate high yield, government bonds, global US. So the machine decides on the basis of which they believe on the AI that I explained earlier is likely to deliver a return for the risk that matches your risk. And likewise, for the equity side, it is not fixed that it must be US or Russia. It will look at all the data and make that decision based on its predictions. So this is the difference. This is machine learning.
So are they all traded in one exchange or global exchanges? Yeah.
No. As you know, in the United States, unlike Singapore, Singapore has one exchange, SGX, but in the US, you have many exchanges, right? So it's not on one exchange in that sense of the word. But the ETFs that our algorithm is studying and programming, we have picked ETFs that are listed in the several USA exchanges. And the reason why we do that is, number one, at least the entry currency is the same. Number two, the USA has the widest range of these asset classes in the world, and not just the widest range, we throw away a lot because even if it's available, but the trading is not liquid, that means the efficiency is not there. Second, the market cap is too small, so we don't want, because we don't want to take risk in that sense. Or the what you call the tracking error is bad, so it's not following the asset class. So I'm just giving you an example, and the fees they charge is too high. So we strip out all this, and then we have a well-defined set of investable asset classes, but they are all in the US, all right? And it covers all kinds of sectors, including countries like Russia, Brazil, of course, Asia, Japan. So we have geographical asset classes, we have commodities, we have alternatives, what we call real estate, we have fixed income, and we have cash, which is FX. So we cover all those things.
Right. So basically, you are investing in the US listed ETFs.
Yes, but it's not US market.
Yes, understand.
US listed ETFs cover the whole world.
Yes, understand. Correct.
Okay.
Correct. Because it's just that they are listed in US, one currency, but the underlyings of the ETF is global.
Correct.
And also across asset classes.
Correct.
Right. So, and the answer to that question has also covered a few of the combined group of questions regarding this aspect of the investment. Peter, I hope that answers your question as well. Peter Lee. Peter also asked whether the Bitcoin is included.
I cannot speak about it yet. I said we're going to launch some new features, but I didn't say I'm going to launch some new products. But since you asked the question, we will be launching a new product soon.
Right. So it will still be inside the SquirrelSave platform, right?
It will be on SquirrelSave, but only for, it won't be for retail customers. You have to, if you're on retail, you can't touch this, the new product that we're planning to launch. It will only be available to high net worth, because Bitcoin and other crypto, to me, there are two things that I believe in. One is crypto is going mainstream. And number two, crypto is actually not currency. It's actually infrastructure, technology. But we are in the investment space and we have clients asking for it. But it is very high risk. And therefore, I think it's only suitable for people who, they don't understand, but they only see the returns. But they need to know that it is money they can afford to lose. That's what I always say. So I only save to high net worth, and it should not be too big of your total asset allocation. But yes, we're watch this space. That's all I will say.
Right. Sounds exciting. I think I can smell big crypto there. Okay. Okay, we'll wait for that. Thank you for your answer. Let me see. Okay, one of the questions.
And I'd like to add, it's important to note that crypto, unlike the product that I'm showing you tonight, SquirrelSave, where I have the factor analytics machine learning engine, where I explain, we look at factors, price to book, price rate, price earnings ratios, dividend yield, and RSI, MACD, technical. I also look at surprise factors like earnings surprise indices, volatility, VIX. So that's for the conventional assets. Now, since you asked a question, I want to make sure you are clear. For those who are listening and getting excited, please be careful. For crypto, there is no price earnings ratio. There's no book value. There is no parameter to value a crypto. To me, that's why I say crypto is actually tech infrastructure, because we understand them to be codes. And not only codes, Bitcoin has a different function, and Ethereum has a different function. And you need to be involved reasonably detailed-wise to know what's going on in the crypto space, and it's our business to be. So I would say for today, the audience, please be careful, because crypto has no valuation parameters. The price is a pure speculative price. Please be careful. But because it is purely speculative and hovering in a fuzziness, I am using AI, because if some of you are mathematicians, and if not, you can just go Google the word starling, S-T-A-R-L-I-N-G, starling birds. Or if you've watched National Geographic, you see clouds shifting form and shape. It's on YouTube. It's called starling birds formations. These are all these migratory birds, primarily in Europe, which fly in a flock, and it's like shape-shifting. It gets dense and black. Go and watch it. It's mind-boggling. It's mesmerizing. But did you know that it's all about mathematics? Because there are professors all over the top universities studying this movement of birds. In mathematics, it's called murmurations, right? It's a murmuration of starling birds. And they've studied that it is roughly 6 to 7 birds in a pack in hundreds of thousands, trying to understand where the whole flock is flying. So these are all mathematics with correlation. So we are applying this kind of mathematics to the world of crypto because each person in the crypto space don't know where the price is going, but it's trying to read each other. So that's all I want to share, that it is highly speculative, but because we are an AI firm, we are using mathematics to increase the probability of getting the direction right. And in 3D, it's not just the direction, it's the momentum, right? For how long? So we are applying all this, and so I'm giving you a preview basically of what we're going to be doing. So we're going to be using AI to make sense of these crypto returns.
Wow, exciting. So I think that calls for another webinar down the road.
Only for high net worth clients.
Yes, understand. Okay, next question. From Edmund. Edmund is asking, can he use SRS funds?
Well, currently we are applying to the Association of Banks to be approved. Yes, we're submitting.
Okay, so not yet. So for cash, only now. Then another important question is, what are the? Do you accept clients from Singapore only or internationally?
Okay, the way I will say is that we are a Singapore-based and Singapore-regulated asset management firm. We are based in Singapore, and if you would like to be our client, you technically just have to meet our KYC rules. That's all. So the KYC rules doesn't say it must be Singaporean only.
Right. So also doesn't need to be resident in Singapore only lah.
That's right.
Okay. So SA, I hope that answers your question. All right. And SA also asked whether can invest in US dollar.
You can. The only problem is that in Singapore, the financial houses like our brokers will collect in Sing. So I always advise a client that you can send to me in US, but the broker will switch back to US. So switch back to Sing and then go back to US. So why do double? So yes, the answer is yes, but my frank advice is it's better if you give us in Sing. Then you save 2 rounds of FX hits. Of course, our broker, we've negotiated an institutional rate, which you can't get as an individual. But I try to help my clients as best as I can. The advice is give us in Sing. However, all right, and this is also important, if you have a significant amount in US, call me first. We'll make special arrangements that you don't get hit twice. Okay.
Okay, cool. So SA, I hope that answers your question with regard to investing in US dollar. So if the amount is big, then please contact SquirrelSave, and they can make special arrangement for you. All right. Okay, let me see. Next question comes from Johnny, and he's asking, can he start with 1,000 a month and then add on along the way, maybe like what do they call that? Every month, put in something, or whenever they get a bonus, put in something, top up.
The answer is you can top up anytime. You can withdraw anytime. So that answers all the questions.
Yes, indeed. Yeah, so Johnny, I hope that answers your question. So you can put in any amount anytime, and you can withdraw any amount anytime. Total flexibility.
That's right.
Fantastic. Okay, let me see. Next question. Okay, Coppo is asking, what is the expense ratio for one portfolio? And is it charging the same rate for one or more portfolio?
Well, I would say if you have no returns, then obviously it's the management fee. The brokerage cost that we calculated is 0.02%. So it's almost negligible because we spread it out. So I would say it's about 0.5% if you don't get any returns. So yeah.
Okay, cool. So let me move on to the next question. Ella is asking, if let's say the ETF is giving dividends, what will happen to the dividend?
Very good. All dividends, if any, are reinvested. And when we screen the ETFs, we are trying to avoid those kind of dividend ETFs. In the US, they are very efficient, but there is also withholding taxes. So we try to pick ETFs that don't pay dividends, but have more capital appreciation. So that's what we do. But if we have dividends, it's reinvested.
Right. Okay, Ella, I hope that answers your question. Let me see. Hmm. Okay, Chris is asking, he's saying that, Victor, thanks for sharing. I note that you have compared your performance against S&P 500. Would this be an apple-to-apple comparison since S&P 500 is basically equity, while SquirrelSave portfolios are across different asset classes?
Yes, good question. The answer is not apple to apple, but S&P is easily more than 50% of a portfolio today. If you do global asset allocation, more than 50%. I would also argue if you include NASDAQ, NASDAQ is not US, by the way. So if you look at stocks like Google, Apple, they are all global companies, right? So it's a misnomer to think that NASDAQ or S&P is actually US. Okay, that's the first point I'd like to make. It is also arguable that it's apple to apple because what we do is technically our AI can allocate to 100% equities if it thinks that's suitable as well. It hasn't happened, but it has nearly happened. So you will use what we call fixed income, obviously, to try and manage the downside. But we also know, because we do detailed data analysis, it's not always true. And it's why we use AI, because in certain types of market conditions, bonds and equities can move together up, which is not supposed to happen, and bonds and equities can move together down, which is not supposed to happen. But our AI is able to see it. So yes, in traditional pair of eyes, then you say definitely it's not apple to apple. But here we are a risk-based manager. So we look at fixing the risk or defining the range of risk and letting the machine decide what combination is able to deliver what we call the best possible returns for that risk. So that's what we are looking at.
Right. Thank you for the answer. Okay, let me see. Now, Chris is asking about the fees, which have already been covered. But one of the question that he asked about the fees on when we top up or when we withdraw, although there's unlimited top up that we can do and withdrawal that we can do, but are there fees imposed when we top up or when we withdraw?
Zero, no fees imposed.
Okay, Chris, I hope that answers your question. And Ella is asking, how do you define a small amount? I think that is related to the area where you talk about if I invest below a certain amount, I'm lumped together with everybody, and if I invest above a certain amount, I will have my own.
Yeah. Okay. So we are machine learning. Our AI is doing all the decisions. We are the parents, and we are watching the children. So far, they've done well. So my answer is based on our observations of the machine, because we are monitoring the machine. We think that based on what we have observed, and given market conditions as well, because it's not entirely up to the machine. Machine is actually managing how to operate in these kind of different market conditions. The figure seems to be about 15,000 Sing or below. I would say it's considered smaller, but it's not bad. You can still take advantage of our trade optimizer engine, TOE, because I used to be a stockbroker. So I used to have small clients buying stocks. So the minimum commission will be very painful for them. So what I do is I aggregate their orders, and then I make one big order, and then I split it up for them. So they share the cost. So we built all this know-how into our algorithms. So I would say if you are, say, below 15,000, it's still okay because we have the trade optimization, but the portfolio design will be more constrained because we don't want to have, $1 is an exclusive only portfolio. It doesn't make sense. So if you have $1, you're probably sharing the portfolio with some people. right? To make some sense of it. But you have seen the returns that I've shown you just now. It's up 70% since May to April this month. But the point I'm making is the machine, by observing it, is around 15,000 or more. The machine will manage you on your own 100, and I can safely say 100%, because I started with 15,000 and it's managing me as one person, right? Under these market conditions. And it's rebalancing me as an individual, right? So that's the beauty of it, because the AI is a machine. So even you put $1, $10, it still treat you as though you've invested $1 million. It doesn't discriminate. It's mathematics. So when my portfolio is due to be rebalanced, it will rebalance me. It doesn't care about everybody else, right? But of course, it then looks after each individual specifically, because it's a machine. It's not possible with the other robos. So we rebalance forward. So 15,000 seems to be the magic number based on my own portfolio. Okay.
Right. Okay, cool. Thanks, Victor, for that answer. I think this is very important differentiation for SquirrelSave, because you are able, because of machine, and like you say, it's humanly not possible to manage so many people individually, but with machine, you can do that, and that's really cool, right?
Yeah. Actually, in fact, today I just did a presentation in the evening to a team of people, financial experts, and they are financial experts, and then they said, if we are in the finance industry, how come we haven't heard about you? And my answer, in short, is because I hardly advertise, and the reason is, up to now we have been busy building systems, because we are really tech. So we build systems, and if you check in Malaysia, there's a bank that just announced they got the license. Well, no prizes for guessing who built the thing for them. So we're specializing in building AI systems, and so all our energy was in it. But they've got the license, so I'm actually on the current phase to promote SquirrelSave and get it more well known. And I intend to bring this overseas to help the poor and the low income.
Right, cool, very cool. All right, yeah, like Peng Hong has just remarked that using AI this way by you will threaten the conventional fund management industry.
The answer is technically yes, and that's why no one has volunteered to cooperate with me. I've asked actually to be part of a bigger asset management firm, but it's understandable, because if you are running a well-known asset management firm and you've already been there for 10 years, or you're going to retire in 5 years, why do you want to go and take a risk and do something you don't understand? Because they didn't build the system, I did. So for them to adopt it, it's already a hard thing, because it's not their baby. But I say, if you look at the output, it's going to be very revolutionary. But I call it corporate socialism. There's no need to do that, is it? I mean, you will still get your pay, you get your bonus, and but for us as a fintech, we're proving a point. We're trying to make things different. So it's different, and that's why traditional managers would not want to adopt us. In fact, I told you I'm a B2B. But did any Singapore bank adopt us? I went to talk to them, right? So in the end, profit is not welcome in his own country. So the Malaysian bank has taken us and built the system, because they cannot be like a Singapore bank or asset management to serve the region. So they know about using my system. And you asked earlier the question, can anyone elsewhere open up the account? My answer is yes lah. The problem is that if you're in Malaysia, you have to open in ringgit. So I think currency-wise, people like Sing dollar. So we're in the right place in Singapore. And like I say, I'm ramping up this year to get people to know about SquirrelSave, because I hope to go and help the poor and the low income in the surrounding countries.
Right, thanks, Victor. Okay, let me see. What is the next question? Okay, it's coming from Kokpo, and he's asking, how is the customer's fund protected if, let's say, something happened to SquirrelSave as a company? What will happen?
Good question. It's like every financial institution regulated by MAS, and we are regulated. Under the MAS, I've been regulated for 30 years, just for your info. MAS requires all customer money to be kept separate from the company and kept under a separate custodian bank. So we have a bank that keeps all your money. So technically, if something happens to the fund manager, right, let's say the fund manager closes shop, your money is still kept by the bank, your assets are still kept independently, and you can withdraw or you can continue investing and transferring it or whatever. It's still your money protected from the company, from the fund manager. Okay, that's Singapore.
Right. Okay, Kopo, I hope that answers your question, and also to another guy by the name Richard, right? So I hope that answers your question with regards to how your funds are kept safe. And another gentleman is asking, do you deploy any leverage or derivatives in the portfolio?
Absolutely not. Absolutely not. I want to make sure the product is simple and safe, and we don't need leverage. Leverage, I would only recommend for high net worth and only certain high net worth. But for our SquirrelSave, no, the answer is zero. Zero leverage. No
Right.
derivatives.
No options.
No, we don't. Options is leverage. So don't
Yep.
do that, because your gains can be magnified. But as I explained, that's half the story. Your losses can be magnified. So don't do that unless you know what you're doing. So for SquirrelSave, I'm helping people with $200, $300. To them, it's a lot of money. So no, SquirrelSave doesn't do it. There is nothing stopping us to create another type of portfolio with full disclosure, but currently we do not do that.
Right. Got it. Okay. Okay. Couple is asking a question related to the safety of funds. Is there a segregation between customer funds and the company's operating fund, and whether you can, move money around as and when you like?
Cannot. The monies are segregated. We are audited by MAS, right, and by external auditors. And the custodian bank has also given a declaration. They know these monies that go into them are not Pivot's monies. These are customer monies. They are always kept separate. Must do so in Singapore.
Okay.
Cannot.
Okay, cool.
Okay.
Coco, I hope that answers your question. Okay, let me move on. Okay, Alva is asking, when you mentioned the performance fee is 10%, does it mean the profit is 10%? So maybe you would want to, explain the performance fee a bit more,
Yes.
maybe with an example.
You invest $100. At the end of the calendar year, let's say it's $110. So you make 10%, right? So your profit is $10, which is 10% of your $100. Our performance fee is 10% of your profit. So 10% of the $10. So we only take $1. So that will be 1% of your $100. So it's not 10% of your capital. Okay. Maybe I also explain the high watermark for those who may not be familiar with these terms. So let's say year number 1, you come in with 100, and end of calendar year, very good, it's $110. So SquirrelSave gets 10% of your profit, which is $10. So we minus $1. So your 110 becomes 109. Okay. So based on 109, the next year, let's say next calendar year, your portfolio is $90, right? Do we charge a performance fee? The answer is no, because there is no profit. It was 109, now it's 90. Cannot. Let's say year 3, the portfolio goes to 105. So from 90, it goes to 105. So you make a gain of $15. Is there a performance fee? No, there isn't. The last time we charged you a performance fee was 109. So we have to cross 109, and only the amount above 109 is calculated as a profit on which we charge a 10%. So that is called the high watermark feature. That means we will never be able to double charge you on your capital. Okay?
Cool. Thanks for the illustration. And for those of you who don't know how high watermark works or want further clarification, please go YouTube and Google it. It's a very established method of how hedge funds are charging their fees, called high watermark. And if you Google it, also you can find articles written about how it works. So what Victor has just did is to give you an example of when you're in profit, how is it deducted, and when you are not in profit, that there's no charge on the profit sharing because there's no profit to share. And then the moment it crosses back that mark, in the illustration that he used was 109. Then anything above it becomes the new profit. Then there will be the high watermark. Then there'll be the profit sharing being charged. Yep. Okay, Alva, I hope that answers your question. Let me see. Okay, Chris is asking, what is the frequency of the portfolio being rebalanced?
Good question. Again, this is where we observe the machine. So my own portfolio, which I can then clearly say, it was rebalanced only 3 times.
Across a period of how long?
1 year.
And then is it fixed period that it rebalance, or it depends on what happened in the market, then it will rebalance depending on what's happening in the market?
Yeah, it depends on the market because our AI is watching the market and it's watching because it's not human. It can watch for everybody's portfolio as an individual. It's like you have a guardian angel for each customer. So in the typical algorithm, here's going into some technicality. We build in dynamic time locks. Okay, so basically the concept is that we believe that depending again on your age, your time horizon, and your risk profile and the market conditions, there is a time lock that the AI calculates. And if you are within that time lock, even if your portfolio moves differently, it will not rebalance. It will not rebalance. Even if the AI say, oh, it's time to rebalance, but the dynamic time lock will say, cannot rebalance, you have not held the portfolio for long enough. So this is to prevent the machine from swinging your asset allocation wildly, right? So the machine will say, no, this one definitely won't make money, but there needs to be discipline that you cannot swing wildly because your transaction cost will go up. So that's why I mentioned earlier the trade optimization engine, all right, which is the external judge on this. So the algorithms are like analysts screaming for their views. Then of course the master algorithm will say which one combination we will pick for this customer. But there is a trade order engine, trade optimization engine that will say, no, you have not held on long enough and I don't want you to incur costs. So there's this check and balance within the system. So the rebalancing is not fixed by 3 months, 1 month. That is the human way. All your human robo or fund managers will do it that way. I used to be human. I had to do it that way. There's no other way. And when I rebalance everyone, right? And I rebalance you back to a portfolio that I looked at a month or 2 months ago. But in our machine, you are rebalanced as an individual portfolio with respect to market conditions. Richard, you asked, with respect to you as an individual, right? So that's the power of AI. And you rebalance it, you not back to the old model, it forecasts a new model. So you're rebalanced forward. That's what AI can do.
Wow, so cool. Okay, good. Thanks for the answer. Okay, let me move on. SA just now was asking about the US dollar funding. He had another question which is specific to him. He's asking if he's working in the US and paying, and as a US tax-paying person, can he open and own a SquirrelSave account?
Okay, this one I have to caveat. This is not tax advice, okay? It's not tax advice and it's not specific to you. But if you are saying there is a certain person A who is a US tax resident, right? And the question is if this person is a US tax resident, can he invest with SquirrelSave, right?
Yes.
The answer technically is yes, but it's a business decision to say whether we want to do so, because the tax complications are not funny, and also the tax reporting. So that's my first answer. It's not specific advice. This is general. The second thing I'd like to say is that it depends whether this US tax resident has a secondary tax residence. So for example, if this person is a Singaporean but works in the US, technically he has 2 tax jurisdictions. So he then has to decide which tax residency is his primary tax residency and report to me. So that's why I say this is not tax advice. It's complicated, particularly for anyone exposed to US. So most people will say, do we really want to do that kind of complicated stuff? So it depends. If it's a big amount, okay lah. We can consider the cost benefit. But for small amounts, for $1 US, honestly, it's not worth it lah. All right, it's not worth it. The tax implications for the US is too onerous, to be frank.
Wow. Okay, got it. So SA, I hope that answers your question. If you have further question that is specific to your situation, perhaps you can contact SquirrelSave directly, and then you can, maybe there'll be more information that they need from you in order to see whether they are able to onboard you as a client. Okay, so let's move on. Okay. Okay, Peter is asking, does your AI and machine learning comes with any capital protection feature when it comes to drawdown amount?
Not capital protection. In the investment world, capital protection is a specific technique. So the straight professional answer is we do not use capital protection. We do tactical asset allocation to protect the max drawdown. Okay, it's tactical. And how we tend to do that is, to make it not so complicated, we look at correlations, all right? And so the basic technique is go for negative correlation. And so the machine can do all the calculations, and it will go into the asset class that it's predicting that will have a negative correlation, and we will invest, and the machine will invest in that. And that, based on looking at how the machine has behaved, has helped to manage the downside, but not capital protection. That is a totally different financial structure. We don't do that.
Right. Okay, Peter, I hope that answers your question. And maybe I'll ask a related question.
And I want also people to gain some education out of this. Not relevant to SquirrelSave, but I've been in this industry long enough. When you go for capital protection structures, and I'll put my hand up, I've launched these kind of products before. And the lesson I've learned is that capital protection will kick in when there's volatility. And if you hold it, and it has a lockup, capital protection needs a lockup. So there's typically, depending on the interest rate slope, it could be 5 years, 3 years. So now interest rates are very flat. So it has to be 5 years to be feasible. Now, in the 5 years, in the first year or second year, if the volatility triggers the capital protection, basically for the rest of your 5 years, the investment is just static. So it's not a good structure. It's nice for a salesman to sell it, but is that what you really want? This is from experience. So we do not use that kind of structure because it will sterilize your exposure to risk if it happens too early. Okay? Yeah. Thanks.
Right. Thanks, Victor. Okay. So related to this risk management side, so what kind of risk management approach is the AI or machine learning using? Is it like there's a cut loss, or what?
Our optimization model is Markowitz optimization, which Finance 101 students will learn on a spreadsheet. What we have done is we have applied AI to the whole concept. So the way we manage risk is not cut loss, all right? There is a cut loss feature because our AI algo is quite interesting and quite technical. There is a cut loss feature, but it doesn't depend on that. The cut loss feature is what we call an emergency button, so which we hope we never have to press, all right? So cut loss means you lost already. So that's not what we have designed our algo to do. Our algo, as I explained earlier, is to predict volatility and troll the entire universe for the combination in real time that fits your desired risk setting, for which this combination has what the machine, through the democracy of algorithms, say has got the highest predicted return. So it maximizes return for the risk you take. It doesn't do cut loss. That is a very static asset allocation technique. And for us, we build it in, but it's a emergency stop button, if you like. We don't intend to press that button.
Okay, understand. So is there a number to that, to when you will press the button?
That number is a dynamic button, again, because we are a machine. It depends on many functions that we have built and coded: market volatility, market level of profit. It's a lot of factors. It's not a simple equation. It's an ecosystem we have built.
Right. So related to this is a question that Chris has asked, and he is asking, saying that based on the various portfolios from conservative to aggressive, what would be the maximum percentage drawdown for each of the risk levels historically?
Okay, so the drawdowns can change when market volatilities change drastically. Assuming they do not change drastically and that data structures remain intact, right? Then technically the conservative will be around 5%, right? The balance maybe about 5 to 10. Then the growth may be about 15, right? Then the aggressive may be around 20, and the very aggressive may be around 25. Yeah.
Okay, Chris, I hope that answers your question with regards to the drawdown. So historically, has it reached or breached those max drawdown levels that you mentioned?
No, it has not.
So the max drawdown that each of those risk level has have hit based on the back test, what was it like?
The biggest drawdown on the back test is in the year 2008, and now in the year 2020 on back tested. But our actual portfolios did not hit those levels.
Okay, and the number was the max drawdown number was?
I can't tell you because in our SquirrelSave, everyone has an individual portfolio.
Okay,
Right.
understand.
So we don't run a fund. For a fund, I can give you one figure because all of you share the same portfolio, but each person has a different portfolio. Yeah.
Okay, got it. Ken, okay, let me see. Okay, Richard is asking, as the ETF we invest are in the US markets, are we subjected to the US tax?
The answer is yes. If there are dividends, we are subject to the withholding tax.
Capital gains?
No, you will get your capital gains.
Right. So then it's just like any other self-directed investors who trade in the US market lah.
Correct.
Yeah. So Richard, that I hope that answers your question. The withholding tax would already just a little bit more info to Richard in case you do not know. Withholding tax would already be deducted and withheld by the broker. So you don't have to do any extra things. Yep. Correct me if I'm wrong, Victor.
So an individual will have to sign the W8 BEN form, for example.
Correct. Don't sign, cannot trade. So
That's right.
yeah. So anyone who trades the US market would know what is that. Okay, let me see. Okay, Ella is asking, how long have SquirrelSave been around?
We launched to the public around August, September 2019.
Okay, so Ella, I hope that answers your question. Let me see. Okay. Okay, Chris says, thanks for taking my questions and organizing this webinar. I'm excited with what Victor has shared tonight, as I'm a big fan of clean data AI. I'm wondering what kind of customer support does SquirrelSave provides?
Well, it's a customer service. You can WhatsApp, you can email, you can call, and our customer service will get back to you.
Okay. Okay, Chris.
But it's not a robot. It's not a robot. It's actually a human.
Yep. So Chris, the usual communication way of a real company run by real people.
So on the point about using data, so here I can share with the members here of Wealth and Joy. We are about to launch a very interesting strategy. So what we have talked about is a globally diversified portfolio, which I think everyone should have, from the African to the Indonesian, especially the poor. But if you're richer, put more money, then you get better returns. We are taking the lessons we have learned and applying our AI to different strategies. So the next strategy we'll be launching is what we call the alpha tech strategy. We're going to launch where we will buy into the tech sector, and the AI will predict bull and bear. And we do machine learning algorithms running on it. So for example, if the market says it's bull, we go 100% into the tech sector. when the market predicts, the AI predicts that there's a bear coming up, and here I keep simple, but there are different degrees of bear, then we will switch out of the tech and go into, and right now our machine learning is showing us it's a combination of fixed income, alternatives, and some other uncorrelated equities. So it's not the same technique as our current SquirrelSave global, the global product, but we're going to come out with a very thematic quantitative strategy. And so we hope to post it up on our website in the next couple of days, the blog, to introduce the concept of market signals using AI. And the market signals are used then to do our tactical asset allocation, but we focus by starting on tech because a lot of the younger people are very interested in exposure to the tech. So our tech sector product that's coming out will have exposure to Apple, Netflix, Google, right, Facebook, Baidu, right, Alibaba, for example, and so on. So about 10 tech stocks. So we're going to come up with this kind of thing. So using AI, we can now do different type of products. And SquirrelSave, as I said this year, I'm going to focus on marketing and getting it more well-known, but we're going to launch some new strategies. We're also going to launch a cash management product for Moneybox. So all this thing, just give me some time because we have been really a B2B company and we only launched a SquirrelSave in late 2019 and then we got hit by COVID. So I just focused on building the system for our Malaysian bank customers and now they've got the license. We are now focusing back on sharing this technology with more people. So look out for this.
Wow, exciting! I mean, I have chatted with you before. I came from a com science background, and I love all these things. Love it. Looking forward. Okay, let me find the next question. Okay. N is asking how to prevent a rogue amendment to the algorithm. So like internal job hacking to the system to
Right. So our applications are on the cloud, and so there's one layer of security, number one. Then we have very specific user access protocols, and we have a 3-layer check on any adjustments to the codes, and not one person can do it. So we have a quant team and we have the tech team. So it requires both to do it, and it's documented and controlled electronically, so it's audit trail. So those are our control measures.
Right, and let me see. The question that's related to this is asked by a gentleman, I think. He said that the overall system seems to require a lot of power to monitor so many data points and so many people's portfolio. Is the infrastructure that SquirrelSave have able to handle and support the load?
The answer is absolutely yes. Like I explained, I grew up in computer science when I had a whole room, conference room size, full of a digital VAX 200, and it has to be air conditioned like the vaccines are, not as cold, but cold. Today, your mobile phone is more powerful than that kind of machine, and iPhone 6 can send 120 million Apollo missions to the moon simultaneously. Okay, so what I'm trying to say, therefore, is no, don't think that because it's AI, you need a lot of power. I think maybe we're reading too much into crypto mining, which, by the way, is moving from proof of work to proof of stake. All right. So even in the crypto world, things are shifting because it's not tenable to go on proof of work and consume all the power. And crypto mining is consuming more energy than Argentina, right? So coming back, it's not that onerous in terms of computing power. That's why I say in 2015 onwards, AI is now available to the layman because your phones are supercomputers in that sense already. So it's not that onerous. And the other thing that's helped is data. The previous problem was data because you have to have live data in order to do your computations. And the problem was latency. So there was no broadband or no internet speed of that capability, right? Trust me, I've been in stockbroking and investment for ages. I wanted to do this a long time ago. It's just a fantasy. But today, your internet just goes shoop, right? We no need to talk with 5G. All right, that's a totally different language. All right, it's not just communications. So my point is, no, you've got latency, which is not an issue. You've got cloud storage, which is very cheap, so the data doesn't cost a lot to store and manipulate. Computing power is tremendous, and you have networking. So I've given a talk on this before, why AI is now available. And SquirrelSave is only my first application of AI. I'm exploring DeFi to disrupt insurance, for example, right? I'm also from healthcare, as I explained, and there's a lot of data, but your data is not digital. Your data is put on PDF, right, and on print. And I run two hospitals before, Parkway, and worked in these two hospitals, and I know our diagnostic side is all dead data. So if you don't digitalize the data, I cannot analyze the data. But in the financial world, it is all digital, right? So it's not that difficult.
Right. Okay, cool. Thanks, Victor. And next question comes from Pat, and he or she is asking, wow, everything sounds so autonomous. So how can we as clients see our performance? Is it as and when we wish, or do we have to, give instruction and say, hey, tell me how is my performance doing? Then you give a report.
As and when you wish on your mobile app or when you log into your web account. We will update the NAV around 5 p.m. each day because we get the data from the US and then we run our programs during the day. So we update for everyone at 5 p.m. So it is available on your mobile phone app or to the website every day.
Right. Cool. So Pat, daily, you can check it on the app and on the website. So to see
Yes.
how what are your exact holdings, right? You can actually see the breakdown of what ETF you are holding, right?
Yes.
Yes, and what's the aggregated portfolio amount
Yes.
in each of your goals.
Yes.
Cool, cool. Okay, let me see. Hmm. Hmm. Okay, Dennis is asking, this AI is using historical data to forecast. How would they react to black swan events?
Very popular question. So, do you consider COVID to be black swan? I would say yes, lah, because the whole market, the whole world was shocked. Suddenly, the market just corrected. So, we have actually lived through that, and the machine doesn't react to one data point. So it looks at many data points in the context of time and then applies it to each individual customer because each of you has specified 1 year horizon, 3 year, or 5 year in our system. So our system remembers your age and remembers your time horizon. So again, it applies data differently to each person.
Okay, cool. So Dennis, I hope that kind of answer your question. The AI will manage any situation that is thrown at it.
Well, not in those terms. What I'm saying is that for black swan events, if it is just one data point, it doesn't react to one data point. Because the machine is not a linear equation, it's an ecosystem. So it looks at patterns and it looks at past patterns that are similar to today, and it will then let all the algorithms do their predictions. And then there's a democracy of algorithms. So black swans are not like a pinprick. Black swans are an event that can last 2 to 3 months. And these 2 to 3 months will be reflected not in one single line of data, but it can be reflected in many lines of data. So our machine is not meant to predict short-term trading. Our machine is investing. So it looks at the impact of changing data on volatility. It's sounding a bit technical already, but it is not rapid trading kind of thing. So a lot of people will say, black swan, the market drop, are you going to cut loss and all that? That's trading. We don't do trading algos. Trading algos, let me be frank, you go and discover how many of them last more than 10 years. Sorry, most hedge funds blow up eventually. Like Archegos is the latest one. When you leverage and you do these algos, when the data changes, you can either make a lot of money or you can blow up. So we don't engage in this kind of trading algo behavior. We don't. That's not SquirrelSave.
Okay, cool. Thanks, Victor. Okay, Richard is asking, with the US and China tensions going on, will your algo have exposure to China? Is it able to gain exposure to China?
It will gain exposure to China or the US depending on data sets, but not on US-China tension. So
Hmm.
if you look at US-China tension, what data are you looking at? You see, so maybe someone say, oh, maybe China trade exports drop. So we are not trading. So our investment doesn't look at one data point and then react. No, we look at patterns and across many algos. And we are not trying to make a return over the next 1 to 2 days or 1 week, right? So we are predicting forward, but we are not trading. So the English presentation of the situation, US-China tensions, we don't make a point of it. We will increase exposure to China if, say, the China GDP, for example, is on an uptrend, right? Or there's a likely appreciation of the Chinese yuan versus the US, right? So we want to gain more exposure and things like that. So then hundreds of thousands of data that the machine will look at.
Hmm. Very cheap. That's the bottom line. Hmm. Okay. Next question comes from Sue, and he or she is asking, what's the minimum age to be able to open a SquirrelSave account?
18 years old.
Okay, so I hope that answers your question. And let me see.
If you're below 18 in this forum, just ask your mom and dad open for you. And you can put your pocket money in it. We have a kid safe for that reason. Yeah.
Okay, tag along adult lah. Hmm. Okay, so a person can have, you were mentioning that a person can have unlimited number of portfolios, and for each portfolio you can top up and withdraw anytime you like. So there's really no, I mean, it sounds like there is total flexibility. So don't need to be so afraid, right? To
Yes,
try, and then if you change your mind about your risk profile or your horizon, just change, create a new goal, and then shift your funds over. Is it?
that's right. That's right.
Okay, so there is a inter portfolio fund transfer. Is that?
No, we don't allow portfolio funds transfer. We, like you explained, you have to shut down that portfolio and then go and refund a new portfolio.
Okay. So the money comes back to our bank first.
Not bank. We have in Squirrel, we have a component called Squirrel Cash. So when your money goes from your bank into Squirrel, it can go straight into the portfolio, or you can park it in our cash account. Then let's say you park it in a portfolio and then you want to change a different type of portfolio. You withdraw the portfolio, you set up a new portfolio, but you withdraw not to your bank account, you withdraw to Squirrel Cash. So it's kept within the Squirrel Cash ecosystem, and then you can then quickly transfer.
Understand.
Yeah.
Okay. So does the Squirrel Cash account comes with some form of interest?
No, it's a pure cash holding.
Okay, understand. So how long does it take from to withdraw to the Save cash account?
Okay, so to withdraw from the SquirrelSave portfolio to Squirrel Cash will take 2 business days.
Okay, so Monday I do it. Wednesday the money appears in my Squirrel Cash.
Correct. Because when Monday is daytime, Asian time, when you give us instruction, Monday night, we got to go and sell. Tuesday morning, they will report back. Tuesday evening, you get it in your app.
Understand. And
Right?
then to deploy funds into a portfolio, is it also like 2 days, 2 business days?
No. To deploy funds from your bank account to Squirrel is same day because most of them use fast transfer.
Okay. So once it goes into the cash, Squirrel Cash, from Cash to one of the portfolio, how long will it take?
Okay, it will take 2 business days because when you set up the portfolio in the morning, then our system will do the calculations. And at night, we send the orders to the United States. And next morning, we get the confirmation. So the next day, 5 p.m., you get it. However, if you set up the portfolio beyond our, say, in the afternoon, then it's not done in time for Monday night, right? So you'll be sent on Tuesday night and come to you on Wednesday. So that's why it's 2 days.
Mm,
Maybe
understand.
1 day, but I say 2 days.
Yep, understand.
Mm.
Okay, so Kopo, I hope that answers your question. His question is, if withdraw from Squirrel Cash back to the bank account, how long does it take?
It should take 2 days, depending on when you send in the request, right? You send early in the morning, technically it can be 1 day because we can send it to the bank, Singapore banking system. But most people, I assume, will do in the afternoon, so it will take 2 days.
Okay, cool. Okay, Kopo, I hope that answers your question on withdrawal. Okay, let me see. Another bunch of questions, I bunch it together, is how to get started.
Just go to my website and press get started.
Okay,
Go
so
ahead.
that answers a group of the questions that the attendees have asked. Okay, just simply go to squirrelsave.com.sg and then follow the on-screen instructions, okay, to
Just
get
press get
started.
started. It'll tell you what to do. and someone opened an account from Paya Lebar MRT. He reached Bugis Junction. He messaged me, account open.
So fast.
Yes.
KYC also.
The KYC for you, my advice, if you're Singaporean, if you're Singaporean, click My Info and enroll to My Info. It's the fastest because we have an API with My Info SingPass. But if you're not, then you have to take a photograph of your ID and upload, and then we have to do a reading of your ID. That will take maybe 2 days. But if you do My Info, it's 1 day.
Right. So for Singaporeans who have my info and then that will be the fastest way to get on board.
Yes,
Yeah, everywhere else will have to upload some documents lah.
that's right.
Okay, got it. Okay, Chris said, thank God the customer service is meant by real people.
No, it's real. It's real. That one I'm not compromising.
Okay, cool. Okay, so CK's question on deposit is also and withdrawal is also answered just now. Okay, let me see. Okay. Couple is asking whether can open joint accounts as a couple
Currently,
or parent with kid.
currently we don't. We don't take joint accounts.
Okay, got it. Oh, then Chris is asking any plans to allow joint accounts.
Okay, the answer is yes.
Okay. All right. So start your own first lah, Chris. Then when the feature becomes available, then you can withdraw back to your bank and then transfer it into the joint account then. Okay, let me see.
I would say that uh, very soon you'll be able to gift a present, a SquirrelSave portfolio to a loved one, uh, and to your mother, because Mother's Day is coming. So watch out for Squirrel Save. You know, we're likely to announce soon, and you'll be able to open an account and create a present and send a loved one an investment portfolio rather
Cool.
than buy them a watch or something.
Does the recipient need to be 18 and above?
The recipient needs to be 18 and above for now. And to answer your question, Richard, we're working on not a joint account, we're working on a minor custodial account where the parent will be the trustee for the child. And I'm doing that because we have some high net worth who want to sponsor poor families in other countries and invest for them. So we are going, and SquirrelSave, we want to do some good. So we're going to introduce all these features. So that's why I say I'm focusing on remarketing SquirrelSave, since my Malaysian bank is now got the license already.
Wow, your place is very full, man.
It is actually.
Now that I hear so many exciting plans that are coming up. Okay, let me see. Okay, Dennis is asking, any credit risks with regard to SquirrelSave?
The answer would be no, because as a counterparty, we don't hold your money at risk. It's held by a custodian. So I would say no.
Okay, cool. Okay, let me see. Okay, Peter is asking if for whatever reasons he wants to close the account, would they be able to remit the money out just like a normal withdrawal? That means can they keep the balance zero, for example?
Yes, you can maintain a zero balance with us without closing the account. Yes.
And there'll be zero fees?
Zero fees. No holding fees, nothing.
Okay, cool. Okay, Peter, I hope that answers your question. Ah, okay, JT is asking, is the edge provided by SquirrelSave patented?
What
How do you protect your IP,
Okay. So the answer is very simple. I have consulted lawyers and they tell me that software is very hard to IP.
Hmm.
But they are willing to take the first step of charging me a lot of money to do a search. Then I said no, thank you. Actually, what's the point of doing a search if you tell me you cannot protect my software, right? So it doesn't make sense. So no, the
Right.
answer is no. But if you have a way to protect my IP, let me know. The best that they could tell me was I could protect it through a trademark, but that doesn't protect the software.
Correct. Yep. Okay, cool. So that's all the questions we have. And we are about just on time, about 10 minutes left. It's fantastic. We took almost 1 hour of Q&A, Victor.
Thank you for the questions. I really appreciate your interest and your time tonight to be with us. But please share this new technology and help someone else who doesn't know how to invest or wants to invest without having to do all the work.
Yes, fantastic. What I really like about SquirrelSave is that firstly, MAS regulated, so that we are, assured that our money is kept in a segregated account with a custodian. And I personally have been investing for quite a while, and DIY is very tough. Okay, so those of you who have is doing DIY, I'm sure you know what I'm talking about. So so with the upcoming all these robos, all these digital advisors, I think is a great way that DIY investors can diversify away from themselves. Sometimes we are our biggest risk, right? We have a deer in the headlight uh, effect, when some shit happened and then we just didn't have the emotional courage to press the button to get out, and then by the time we wake up, and then already the account is draw down. So with by outsourcing it to DFY service providers like SquirrelSave, not don't put all your egg in one basket, right? For those of you who have been following my webinar for a while, you know that I always advocate diversification. So can just start small lah. Start what I call a chicken amount. Okay, start a chicken amount and then kick the tire, and then probably you have more questions. So check out their customer service, ask all the questions that you have, and then see whether you like it or not. And if you like it, then you can increase the allocation along the way or reduce it along the way. Now, personally, I've opened my account with SquirrelSave back in January, and I've opened equal amount for all the 5 risk levels, and they are now up in the profit, like what the Victor has shared in terms of the performance for the 5 risk levels. And I think I'm happy, to have diversified away from me, and that's why it's really making money when you sleep. As I have shared in one of the slides right at the beginning, right? And with no minimum, no lock-in, no fees for withdrawals or deposits, and no minimum account balance to maintain, I think there's complete control and flexibility. So I'm not selling SquirrelSave, but I'm just saying what convinced myself to allocate some of my funds to SquirrelSave, and you do your own due diligence, right? So tonight you have here the founder and the CEO of SquirrelSave shared, and also take all 1 hour of questions from all of us. And then the next step, I think, is for you to go check out the website, open the account, it's free, right? Use my info, you'll be very fast. I've already experienced that. And then after that, you decide how much you want to put in. Put in chicken amounts. They have no minimum, so put in an amount that you're comfortable with to start, and then you can change your mind later on, no problem. All right. So for those of you, and I saw some of you have asked me questions about if they want to put in much bigger amount, how can they do it? I think quite straightforward lah. Later I will reply your WhatsApp. Okay. For Daniel and another friend that that are watching. All right. So, Victor, again, thank you very much for your sharing and your time tonight with sharing with all our members here. And we look forward to your new products and services that you're launching in the coming months and weeks. And then perhaps we will call for another webinar at an opportune time again to share with us your new offerings. Any last words with our attendees?
I just want to say, stay safe during this COVID period. Singapore is going through a tough time because we're a small island, but we believe that we have governed well, and I think Singapore will be in good position. There are many foreigners who envy us for our investments, insurance, healthcare, and education. So we are actually in a good place, but we need to make sure that our technology also benefits other people who have no benefits from their own providers in their respective countries. So remember, stay safe and be happy, and please remember, don't take unnecessary risks. Okay?
Yes. Okay. Thank you, Victor. And have a good night. And to everyone else, I'll see you at the next webinar. Bye bye, everyone.
Good night,
Bye,
everyone.
Victor.
Thank you,
Bye, Victor.
Richard. Good
Thank
night.
you. Bye bye.